Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. Last week, 31st of Jan, we were a day before the budget, and now that we've seen the budget done and dusted, we've seen just before the budget, during the day of the budget, and the day after the budget, market did give a thumbs up and post that a little bit of consolidation. And this morning also, when we begin the week on Monday morning, there is a little bit of shade of red on the screen, and rightly so. I think after the momentum that we saw on the upside, it was only prudent to expect the markets to take back a little bit, and that's what exactly is happening. So as I speak to you this Monday morning, Sensex is down, trading at just below the levels of 58,200. Nifty is trading below 17,400, 17,350 or thereabouts. And the Nifty Bank is trading below 38,200. So these are the leading indices. A little bit of shade of green in public sector banks post the announcement of numbers, especially for names like State Bank of India and Bank of Baroda. Significant improvement on the earnings front and lower trajectory with respect to gross and net NPA and provisioning coming down, and bump up in the net interest income and margins. So over there, I think there is some buying interest, expectation of further quarterly numbers for this financial year, fourth quarter, and the next financial year. Improvement is visible. And the case of worry, if any, is on the energy basket, that is crude oil. $93.60 a barrel on the Brent, and $92.20 a barrel on the NYMEX. This is a point of concern, especially for an economy like India, which largely depend upon the crude oil imports. But yes, remains to be seen how the geopolitical situation unfolds and what does the OPEC plus nation have to say. Having said that, currency market, nothing to speak about. Well, it's flattish, and possibly today, I think the money markets are closed, if I'm not mistaken. I stand to be corrected over there. On the markets, well, I think it's only narrow consolidation. We have the credit policy on 10th of Feb, and I think we will possibly take some cues from there. And interesting to see what the Honorable RBI Governor has to say in terms of what the inputs he gets from the Monetary Policy Committee. Overall, I think lower levels should be used as buying opportunity, accumulating certain stocks. In terms of further events to unfold, I think state elections in number of states, and post that we will be waiting for the outcome of those state elections as to which way the wind is blowing. I think markets may take a little bit of cues from there as well. Depending upon what the outcome is, of course, there will be reaction. But I think, again, over here, if you do get any kind of correction in the market on fallback of the state election result, I think that's also a great opportunity to buy into stocks. We are virtually approaching the fag end of the third quarter earnings, and if I have to sum up whatever we have seen up until now, I think there has been no major disappointment. That's a blessing in disguise. Significant improvement in certain sectors, especially banking and finance. And if you recollect our earlier conversation, just before the third quarter numbers started unfolding, I had requested all of you all to look at IT, banking and finance, and autos. Well, auto is taking a little bit of backseat today because of selling pressure and profit booking. But I think these are the three priority sectors that you should focus on. And largely your focus should be in the select large cap names and of course some select mid cap names. But I really not really concerned with the small corrections that we are seeing. Consolidation, as I always mentioned, is healthy for the market. Lower level profit booking, corrections on the lower side are great opportunities to investors to come in and label into stocks which they have shortlisted in terms of their shopping list. On the global news flows, well, we'll have to take it in a stride. As far as with the pandemic, there are relaxation in the restrictions in various states. We heard Maharashtra, we heard a couple of other states relaxing the restrictions that were put into force. And going forward, what the news flow is what the market will possibly react to. And I hope and pray that there is no untoward or negative news flow as far as the pandemic is concerned. So trade with positive, invest with positive bias, use corrections to get into some of these quality names in these three sectors that I mentioned. And if I have to highlight one particular name in the banking universe, especially on the PSU side, and the results that we saw last week, State Bank of India, stock has given thumbs up to the numbers, the market has given thumbs up to the numbers, and the stock is reacting positively. Despite the red color on the frontline indices, State Bank of India is trading with positive bias. You're seeing some buying interest coming in. I think this is one stock that you should have on your radar. Start accumulating it. As a disclosure, we do have a fundamental buy call on State Bank of India from a longish time horizon on the fundamental side, as I mentioned. And don't go and put all your money at one time. I think staggered buying is the most sensible approach to invest into stock market. So start investing at current levels, and whatever dips you get, start accumulating State Bank of India in your portfolio from a long-term time horizon. Thank you very much for your patience hearing. I'll see you again next week. Take care, stay home, stay safe. Bye-bye.